I think that Bitcoin is a million times better than gold, and it's going to gradually demonetize gold over time. So no, gold will go to the utility value of gold, whatever that utility value is. But I don't think it's going to be adopted as money in the 21st century. I think Bitcoin is I think a great deal of the bad behavior has been flushed out. I don't think you can say everything. I think there's still a lot of unregistered securities in the crypto ecosystem, and it's undoubted that Bitcoin is cross-collateralized against some of those unregistered securities. And there's more regulation coming to anyone that's in this space, more clarity. So I think the worst of it is behind us, but I don't think that the industry has been clarified or completely rationalized yet. I think that there's thousands and thousands of cryptos that need to disappear, right? I think there's a 99% rationalization rate that needs to happen. And so I just think we went through an pretty important deleveraging. And I think the people will be much more careful in the way they view things going forward than they were a couple of years ago. I think we were in a Wild West stage the first decade of the industry, and I think we need adult supervision in the industry, and there's an entire generation of people that need to understand counterparty risk and basic risk management, and they also need to understand the difference between a security and a commodity. And until they grasp the nuance of how you create a digital commodity, they're not going to grasp, the way to segment the market and the right way to think about all these assets. No, people just want to ask me that question. They're just trolling me, I think. I want to speak out about Bitcoin, right? The chair of the SEC was asked probably 6 times in congressional testimony and other public appearances whether Ethereum was a security or whether it was a commodity, and he wouldn't endorse it as a commodity under testimony and in the public eye. So I think it's above my pay grade to opine, and I know there is a big debate. There's going to be a debate, amongst regulators. There's going to be a debate in DC. So they will work that out. I happen to be of the opinion it's an investment contract. I think it's quite evident to anyone that spends a few minutes thinking about it. But, I'll leave it at that. People are free to make their own decisions. I think that Bitcoin is the only asset in the space that is broadly institutionally held, and it is more than zero. For example, we bought $4 billion of it, so we know that companies have it. We know that institutional investors have it. We know there are insurance companies that hold it. So it's not zero, but it is not nearly as broadly held as it will be. And I think that we're still early days. I think that the institutional interest in Bitcoin has dramatically jumped in the macro community and the hedge fund community over the past year. I think you can see in the body language and the rhetoric of JP Morgan and Goldman Sachs, Jamie Dimon, and the way that David Solomon speaks about it, and the way that BlackRock speaks about it, and the way that Ray Dalio speaks about it, and the way that George Soros speaks about it. You can see that we're no longer at the stage where people are skeptical that it will continue to exist or skeptical of its value. I think it's now got the grudging respect of a lot of people. I think the banks would like to see more clarity from banking regulators about how much they can hold on their balance sheet and what the reserve ratio would be. And I think the accounting treatment clearly has been a liability for large institutions, because indefinite intangible it's always going to understate the value, and it's also going to create it's always going to create confusion. because I could hold $1 billion and you could hold 100 million, and we would both look like we held 100 million, and you would have to dig deep into my financial statements to know the difference. And so it just makes everything hard and opaque. So I think that we have more adoption to come, and every single thing that happens, every time that there's an advance from the FDIC or FASB or CFTC or SEC or Congress, I think all those things are catalysts for adoption, and we're going to see more institutional adoption as time goes on. I think that Bitcoin is 1,000,000 times better than gold, and is going to gradually demonetize gold over time. So no, gold will go to the utility value of gold, whatever that utility value is. But I don't think it's going to be adopted as money in the 21st century. I think Bitcoin is a better gold than gold. You can move it at the speed of light. You could see with the Lightning Network evolving that pretty soon we'll have 1 billion people able to move any block of Bitcoin anywhere friction-free. And so Bitcoin is digital money for the 21st century. Gold was metallic money for the 19th century. So I just think if you believe in sound money, then you should do yourself a service, and you ought to sell your gold and you ought to buy Bitcoin, because Bitcoin is sound money for the 21st century and gold was sound money for the 19th century. It's just that simple. I think is that the accounting is toxic, and FASB didn't need to address this issue before MicroStrategy, Tesla, and Square all bought Bitcoin, because there was no more than $1 million of Bitcoin in an operating company. So it was an immaterial issue. Now there are billions and billions of dollars of assets in publicly traded companies, so it's material. Lots and lots of people wrote to FASB asking them to take this up as an issue. FASB took a vote and unanimously agreed to take this up as a project, and they're working on the project right now. So we will see what they come back with. But for publicly traded companies with GAAP accounting, to adopt Bitcoin in a big way, there's a couple things you need. You either need to fix the accounting so it's not prejudicial and hostile to the ownership of the asset class, and that means at least make it kind of pari passu to holding equity or something. Like if you're holding equity, you take a mark to market and you have fair value accounting. So that's one possibility, and the other possibility is people have to hold it in the form of a security. And if you hold in security, you would probably get fair value accounting, but that means an ETF, and preferably a spot ETF. The rules in public companies are you can't hold more than 40% of your assets as a security before you trip the SEC 40 Act. So MicroStrategy couldn't do what we did if we were holding Bitcoin as a security. We have to hold it as a property. So I think that you'll see large-scale treasury adoption when you actually see, the accounting start to look like fair value accounting, and or you start to see a gateway like a spot ETF. And if you don't have either of those things, then you have to have the majority of your enterprise value be constituted of Bitcoin. Like with MicroStrategy, we have 129,699 Bitcoin. So our shareholders can multiply the price of Bitcoin times that. And if Bitcoin moves up $1,000, they know we added $130 million worth of value. So that's not that hard. But if you were a company and 5% of your enterprise value was Bitcoin, or 2%, or take Tesla, they would have taken a massive intangible write-down and gotten all the negative optics, but it would still be immaterial to the rest of their P&L or to the rest of their enterprise value. So it's like all the downside, not so much upside. I'm optimistic in the next 36 months we'll see improvements in both the accounting and the spot ETF, and it might come sooner. It might come in a year. Again, you got to take a 4-year or longer time horizon. Bitcoin is outperforming everything in 2, 4, 6, 8, and 10 years. So it's that simple. What you want to do is get rich slowly, not get rich quick. And that means that the time-tested technique for investment is you buy high-quality, scarce, desirable property and you hold it forever. And you just got to figure out what is scarce and desirable and high quality. A little mini course, the Saylor series with Robert Breedlove, which was like 20 hours or 22 hours of lectures. It's been seen by 250,000 people. So if you did the calculation, right, it's like if I taught 1,000 students every year for 250 years. I did another 4-hour thing with, with Lex Friedman and a 4-hour discussion in my library in my house in Miami. It's been seen by 3.9 million people. And I calculated that that's like more communication than every meeting I had in my entire life. So the short answer is, I think I'll go on the podcast circuit. I do like teaching, and I'm very open to looking at more academic things. But if anybody looks at what I've said consistently since September of 2020, what I've said is Bitcoin is scarce, desirable property, and I intend to hold it forever, for the rest of my life. I'm not a speculator. So, I don't apologize for saying I like cheap mortgages, and I don't apologize for saying people should buy Bitcoin. Everybody can decide how much Bitcoin they want to buy versus how much land versus how much art versus how much whatever else they want to own. The other thing that Frank doesn't acknowledge, again, is 2 years ago, Bitcoin was $10,000 a coin. And since I started, gold is down 15% and Bitcoin is up 100%. So for everyone that has the time horizon more than 2 years, your choice is lose 15% of your money or double your money. And if you have a time horizon of less than 2 years, you can't reasonably think of yourself as an investor. You're just a trader or a speculator. If you always adjust it to be less than 2 years or less than a year, then you're always a speculator, right? If you're an investor, you're taking a 4-year time horizon or a 10-year time horizon or a 30-year time horizon. We've been in a recession since March of 2020. If you calculated or if you estimated the economy based upon real output and then you adjusted it for the strength of the currency, if the currency loses 20% of its purchasing power and the economy is flat, then you contracted the economy by 20%. So the currency's lost 40% of its purchasing power in the past 2 years. If the economy grew 5%, you're down 35%. So yeah, we're in a recession, but I'm not a macroeconomist, and I don't really care to engage in the debate about what is the definition of a recession or not.